Hello, I welcome you for the explanation of my daily trading systems for the Forex market. I will show you step by step how I'm going to analyze the markets and how you can make money using my trading signals. The development of my system belongs to more than 20 years of experience in the financial market and is an ongoing development process. Over 90% of my analysis belongs to volume. Volume is the only leading indicator that shows you the direction of the market before it begins. What makes a stable trading system work? First, trading the right markets. Markets must be liquid, otherwise it makes no sense trading. Second, use of support and resistance. Third, entry signals using volume analyzers. Fourth, using multiple time frame to define the trend. Fifth, money management, and sixth, trade management. About liquid markets. The Forex market is the biggest market in the world. Over $5 billion on a daily basis. We can choose 28 Forex pairs that we can trade. This is the Australian dollar, the Canadian dollar, the Swiss franc, the euro, the British pound, the New Zealand dollar, the US dollar, and of course the Japanese yen. Here we see a chart of the New Zealand dollar against the US dollar. Those little triangles that you can see, that pointing down and that pointing up, are some indicators that I developed by myself to give me sell or buy signals. Then I have my own volume indicator that you can see here. The different colors shows me if I have to do with amateurs or if I have to trade with smart money. The third indicator is also a development of mine. It shows me the trend here on daily basis, and here it shows me the trend on weekly basis. The color in gray means that the market is neutral, green color means that the market is in uptrend, and red. Here we see support and resistance line that I'm going to use, and I put them by hand on my chart. So here we have a very good resistance. Then the market came down, broke this resistance, and resistance became support. From this point on, I begin my analysis, and I see that I have to deal with amateurs here in this case, and I can see that on volume as the arrows are going to indicate. Here we have the first break of our now support line, but this is an amateur move. I get a signal, but I will not take it because there is no professional money in the market. Then on the next slide you can see I get another signal, but again no professionals in the market. Then I get another bar. The bar is going to be a little bit up, but again so far no professionals inside the market, so I'm not interested in taking any trades so far. The next bar is still useless for me because I don't see any movement of professionals. Then I get another signal, and again I'm not going to take it. But an interesting point here is, if this move is going to be initiated by amateurs, then they probably will have to stop one tick or a few ticks above this high. After this bar, or after the next bar, as you can see, they may be going to put the stop above this point here, so they're going to move it. But now it's going to be interesting, because now, as you can see on the volume, the professionals going to step in, and this is a very huge bar, but no effort. Normally, if you have big volume increase like this, and the professional wants the market to go up, then they should easily taken out this here and going up and up and up. But this is not the true direction of the professional money, because they have something else in mind, and I think that they're going to put out the stops from the amateurs here, and it's very easy to see that in hindsight, but believe me, that was my original thought when I saw this bar at this time. And this is the difference if you're going to use computer analysis or you're going to use your human sense, means you're going to use your brain. Okay, just to explain that, to read a chart in combination with volume is an art, and that needs time and practice and practice and practice. So it's not possible here in this short time to explain. But again, as you can see here, it was still amateur move, still this bar came in, and this is going to be very, very interesting. But let's see what's going on and what's going to develop. Now here maybe the amateurs saying, yeah, the market is going down, we done the right thing. But look carefully at the last bar. The close is in the middle of the bar, and this is normally not a good sign for a down move that should carry on. Now the amateurs maybe get a little bit nervous, and at this point here the stops are taken out. You can see that very easy. This high was taken out by this one, so look carefully at the price. 72424, 72464. You can see that the amateurs are get out of the market because they have done the wrong thing. So here on the next bar I get my first entry signal, and this is a signal that I will take for sure, because everything is going to be cleared. The fronts are cleared, so that we say in German. I don't know if this exists in English, but this is a signal I will take for sure. Next thing for me to do is to check the daily trend, and you see the daily trend is in downtrend move. And the next thing I'm going to check is the weekly trend. The weekly trend is neutral, so this is a good combination to take the trade, because till the weekly trend is going to change, that takes more time. So for me it is enough if this trend is neutral. Alright, then we go get the entry point here, and here I normally put my stop at this line. This is also an indicator that is programmed by myself. I will explain that a little bit later, because this has to do with my trade management. Again, this is the entry, this is a stop under normal circumstances, but in this case I use a stop a few ticks above the last high, because I'm going to trade with the professionals, and they cleaned up the market anyway, so it's no need to risk more money than necessary. So here in this case I'm going to increase my position. The next bar shows me, if you get a signal here that I will send to you, that there was enough time to get into the market on a daily basis. The next bar repeats that, but we're going to go in the right direction. So in the moment there is nothing to do, just sit and wait what the market is going to do. Here we nearly get a point where we have to do something, but we have to wait. Here the market closes underneath line number 2, and that's my first trade management rule. If I have a close underneath line number 2, I will move my stop automatically to break even. Nothing more to do so far. The next bar is closing underneath line number 3. That means that I move my stop to line number 1. If I'm going to get out, I get a little profit. Or if the market is going to close above line number 2, then again I'm going to go out. Nothing to do, because the market is now underneath line number 3. We changed our stops to here, so nothing to do in the moment. Here we have to do another action, because we have a close underneath line number 4. That means that I'm going to put my stop to line number 2. Or if the market is going to trade and close above line number 3, then I will go out automatically. A very small bar coming in, then the first reaction. This is also an amateur reaction. Now we get a little sideways movement, and here on this bar I have to do a decision. Do I go out or shall I stay in? Because you see on the left, here we get some support, but I want to make as much as possible, so I wait and trade it with my system. If I would do this in day trading, I probably think about going out, but in this case I still stay. So the next bar is coming in and closes above line number 3, so I go out and I make a profit, approximately 2,513.89 euros. The commission is still out, so that means that I minus the commission, and I made a little profit of 2.5% for one trade, and this is not a very bad thing. So my money management is also very easy. I trade an account with 100,000 euros. My risk is no more than 1% of my account. That means I risk no more than 1,000 euro for a trade. That is very important, because if I'm not going to risk more than 1%, I must have 20 losses in a row to lose 20% of my account, and this is not possible. It never happened so far, and not with a system that is going to use volume. I hope this little explanation makes some sense to you, and maybe I'm looking forward to see you as a customer here. And so far, thank you for your time and thank you for watching.